Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, over the last 24 hours, the Australian bears have been comfortably chipping away at the crucial support level seen at 71.80 as we still remain focused upon this level. Also to note, it is the 60-day moving average, which if breached would confirm a move down towards a region of 71.35 to 70 cents, where we were challenging this level around the late October. Although there has been some news that China and the US are looking to come to some talks on the tariffs, which could be a little bit positive for the Aussie. So do keep an eye on the headlines in case something unexpected does arise. But at the moment, from a technical point, the market still is poised for a further test down, especially to the fact that the US dollar has regained further momentum since taking the handle of 97 and posted a high of 97.50 overnight and is currently at present trading at 97.41 this morning in New York. Resistance at this stage is seen at 72.35 for the Australian dollar. The dollar index, as I mentioned, is still remaining presently firm. This has pushed further pressure on the euro and now looks towards its objective of 111.60, with the support now seen at 112.60. A break beneath there would give further exposure, of course, to the downside. With the recent outside range day now confirmed, should help along the fact that the market should fall further. Resistance seen at 113.70 on the day. Dollar yen didn't make any significant moves overnight and still at present remains unchanged since yesterday, although I do expect to see further gains since the rebound for the second time of 112.15 could see a move up towards a level of 113.60 and the target at this stage seen at 114.20 and reassess from there. The pound falls further overnight and closer now to the objective of 122.24 as it trades underneath 125. This now being a 20-month low and falling over 2% does give further concerns we could see weakness. The British Prime Minister overnight has delayed the UK parliamentary vote and stating no definite date or time in the future, with changes of a no-deal Brexit weighing on heavily on sterling, as it recently, as I mentioned, fell 20-month low. With the descending triangle broken, the measured move does come in around 122 to 124, and I view any rally, do be a note, is quite way away, around 126.20 as a resistance. The gold slipped away from its 5-month highs after posting a high of recently of 49. The decline now looks back towards the support of 40, but should find demand from 36. Overall, I do expect to see further tests up, due to the fact with the uncertainty of the Federal Reserve raising rates next week, along with Brexit and also the US and China situation on tariffs. And wrapping up with oil, well, the break could be to the upside as the market is appearing to form a base here at 49.80. If so, could see a rally up towards $54 to $55 as a target. As long as we maintain above 49.80, I hold to the bullish call. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.